Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Tulsian, I first wanted your thoughts on this metals rally that we are seeing, especially the non-ferrous ones, and your thoughts on how to approach this now.
See, Anuj, maybe looking to the rupee weakness, though the rupee has strengthened today, but if you really see the rupee weakness which has happened, that has given an advantage to non-ferrous metals, because as I've said last week also that all the non-ferrous metals are import parity prices driven, whether you talk of aluminium or zinc or copper, and that is giving them the prime advantage. And those who have been the primary producers, maybe like aluminium in case of Hindalco and Vedanta, or maybe zinc in case of Hindustan Zinc, they are seen to be the big beneficiary, or maybe National Aluminium, NALCO for that matter in case of alumina. They are seen to be beneficiary, and maybe this trade war now seem to be getting resolved again. You may see the things improving on the LME for all these things. But coming on ferrous metal, which we have been saying, and in fact today on the channel, where after hearing the Sarda Energy also, in Q2 generally you don't see the mild steel prices seen going up, or maybe ferrous steel prices going up, which is seen happening now, and that is seen giving quite a good comfort. Apart from this, the steel secretary also, she has said that 10% growth, consumption growth is seen in for FY19 for steel consumption, which in fact is a quite bullish and quite high, and that will give the very good advantage to very good operating leverage to all the big and small players, whether you talk like Tata Steel, JSW Steel, Jindal Steel and Power, or maybe Sarda Energy, Sunflag Iron, Sandur Manganese. In fact, Sandur Manganese has been hitting 50 or 52-week high at 1300 plus after the robust number. So I think overall, and maybe NMDC can also get added to this. So overall things are looking quite positive on ferrous metal, because as I said that Q2 is, in Q1 we have seen quite robust. Q4 is always the best quarter of the steel sector, but Q1 was quite good, broadly on the lines of the Q1, and even Q2 will be broadly on the lines of Q1. So yes, we might be a positive to neutral view on non-ferrous, but quite positive view on the ferrous metal stocks going forward.
Okay, so it's a positive view on some of the metal stocks there, Mr. Tulsian. Mehraboon Irani is also with us in the conversation. Mehraboon, you know what? I will not talk about the gaining stocks right now. I'll actually talk about some of the losers, or basically stocks that are sitting out of the rally. Axis Bank and ICICI Bank. Big debate on whether the worst is over. So are days like these a buying opportunity for you on both of these, Axis and ICICI?
No, ICICI Bank, I would not certainly like to put my neck out on it. I think the stock actually has made a move. And even that move, honestly, I don't have any reasons to define as to why that move happened suddenly of 20, 30, 40 rupees on the upside. Every person on the street, every fund on the street is more or less positive on this particular stock. And I personally believe that there are possibly some more skeletons which could still spill out or come out. So I would not like to take a positive call on ICICI Bank also. Axis Bank, I think there will be some more developments which could happen, which I think market would not like to possibly hazard a guess as to what is going to happen, as to ultimately who is going to take over from Shikha Sharma and all. So that is another question mark right now in the market. So I think buying opportunities, I would certainly not like to say they are at the moment. Just because others are moving, I would not like to buy into them. I think there are better bets available, and maybe for the last 1 year, I've turned a little bit positive on PSU banks. And I think there could be opportunities relatively more over there as compared to something like an Axis or an ICICI.
Okay, by the way, just pull out intraday chart of Godrej Consumer now, and also along with that, Godrej Industries. Godrej Consumer, of course, is a big move happening right now. Godrej Industries, the holding company, of course, for Godrej Consumer, both F&O stocks. But big move, Mr. Tulsian, in Godrej Consumer, 4% higher. Your thoughts on the stock?
So, in fact, we have been taking the positive call on Godrej Consumer, because that was seen maybe when it was ruling around 1100, 1150 about 3-4 months back. At that time, this was seen to be the cheapest stock at maybe PE of 45. And looking to the growth the company has been demonstrating, in fact, in Indonesia and the Indian market. They have been struggling in Africa, but both these geographies have been really giving them very good edge. And in fact, Q1 numbers were seen to be quite good. But maybe at 1400 rupees, I think we will be a bit cautious and would take a buy call on Godrej Industries. Because if you see the Godrej Industries, now Godrej Industries is the holding company for Godrej Agrovet and Godrej Properties, holding about 55% stake in both, and they are holding 23% stake in Godrej Consumer. And in fact, if you see the run-up which we have seen in Godrej Consumer in this last 3-4 months, from a level of about 1,050, 1,100 to 1,400, in fact, that has not seen having reflected into the Godrej Industries. And in fact, Godrej Industries value of all these investments, though the consolidated numbers of Godrej Agrovet and Godrej Properties gets reflected in Godrej Industries, but if you take the combined valuation of these investments, it's at about 37,000 crore, while the market cap of Godrej Industries itself is 20,100 crore. And in fact, Godrej Industries standalone numbers were seen to be quite good. And if, in fact, even if this Godrej Consumer is numbers, maybe the share of profits of the company gets added to Godrej Industries. So I think market has probably not understood the potential, in fact, of Godrej Industries, which is seen to be immense. And in fact, when it used to rule at around 570, 575 or 580 about a couple of months back, I have said that this Godrej Industries is capable to give a return of about 40% along with Godrej Consumer. And we have already seen, as I said, Godrej Consumer having run by about or having risen by about 20%. So it is the time that the market will understand the valuation of Godrej Industries also going forward. And in fact, now we will initiate a buy call on Godrej Industries maybe at a level of 615, 620. But no fresh buy call is being given now in Godrej Consumer at around 1,400.
By the way, the ticker is alerting you to a lot of stocks that are flying around. Nalco is one of them. Let's add one more to the list. HDIL. This one has become a bit of a mystery stock over the last couple of weeks. Let's pull up the intraday because you'll find a huge surge, pretty much like Nalco, on HDIL as well. And if we look at the last 3 or 4 weeks, we're talking about almost 40-50% price appreciation since numbers came out for HDIL. Mr. Tulsian, any quick thoughts? I mean, were the numbers that path-breaking to inspire this kind of a move? Would you advise anything on HDIL now?
See, Surbhi, I won't call that number to be very extremely, excellent, but you can say that the numbers were not bad. And in fact, look into the numbers having seen from other real estate companies, though the HDIL have been, booking the or have been posting the or presenting the P&L based on the completion project, and under the revised accounting standard, even the completion project method has been adopted by now all the real estate company. But I think that it has to be read in context to the prices at which we have seen having corrected in case of HDIL, and in fact we have seen that promoters are seen resolving the debt issue or the overdue issues with the banks and getting their properties also released. So probably that has seen, market has found values in that, and because of their strong presence in the extreme western suburbs of Virar and Vasai, where the company is holding huge chunk of land, there this affordable housing is seen really giving a big push. So maybe combination of factors were flattish kind of or better than expected kind of Q1 numbers, and the valuations, at which it has after having corrected so much, is seeing this buying coming back.
Okay, the buying is coming back on some of these names. Just look at the move in a lot of these stocks. I think the latest to join the bandwagon now is GMR Infra. Just pull out the intraday chart on the stock. And of course, ever since Nisha broke the story on Friday about the airport vertical getting a clearance, and now the the IPO, the roadblock clearing for that, I've seen a big move. Today, of course, there was additional information about DVI fund, the stake crossing 5%. So large bets right now are being taken on that one. So that stock up 6.5%.
Well, we're watching a very, very strong market this afternoon. There's been no let up. Let's get some more trading ideas in then. Sandeep Wagle is joining in. That's a nifty for you. 83 points higher. Sandeep, what are you working with? I'm guessing you have a couple of long trades in mind.
Afternoon, Surbhi, absolutely. I have a long in a RBL bank that has given a breakout, buy it with a stop loss of 585, target of 606, and a buy in a Divi's Lab. The pharma space is looking strong. I think this will be an outperformer. Stop loss 1233, target 1296.
Okay, Sandeep, thanks a lot for those trading ideas. The market's looking good. Ms. Tulsian, Surbhi was spotting TVS Motor. 537, risk reward is good here?
Risk reward is seen favorable for all 4 two-wheeler companies, and if I really go with the pecking order, probably it will be Bajaj Auto, TVS Motor, Eicher Motor and Hero Motor. Because if you really take the valuation call on Bajaj Auto and Hero Motor, they are ruling at a P multiple of 15, 16. Even TVS Motor, having seen the good numbers of Q1 and stock having corrected so much, this kind of rally is seen warranted. And even for Eicher Motor, going for the capacity expansion, having now stuck on a monthly sales of about 75,000 vehicles per month is seen going to get increased, with the capacity getting increased to 9.5 lakh vehicles per annum, which will start in Q2 FY19. So in fact, we are keeping the positive view on all 4 two-wheeler stocks. It's just a matter of taking order, whether you like Bajaj Auto or you like Eicher or you like TVS Motor.
Tulsian sir, thoughts on L&T and this big buyback rally that we are seeing? Beyond the buyback trigger, how else would you view the stock now? I guess it's at the higher end of its trading band of the last couple of months now.
See, Surbhi, there are 2 parts. This is what I've expressed my view in the morning also, that if you go by with the buyback logic, market is seen to be over exuberant on that, because firstly, if a company is paying a dividend of about 16 to 18 rupees per share and going for a buyback, the buyback in my view has to be at 1400 plus, otherwise market will get disappointed, number 1. Number 2, if you see on the net worth of 50,000 crore L&T, one must, because I've seen many analysts have been giving the consolidated numbers and all that cash and bank position, which is irrelevant. When you analyze a company for buyback, it has to be the standalone number. The net worth is 50,000 crore. I presume that they cannot go for more than 5,000 crore, which will be about 3%. And when there is no identifiable promoter in the company, 100% is public, then you presume that the participation and acceptance ratio will be 3 to 4%. Now going forward, if the company on a standalone basis is already having debt of about 11,000 crore, paying yearly interest of 1,400 crore. So if you buy back a stock at 1,400, 1,500 and just by paying or effective interest of 8-9%, you are giving 120 rupees for the exit to few 2 to 3% exit, which I don't think that is a prudent policy. If the company is cash rich, maybe like software companies where they sit on 20,000, 30,000, 40,000 crore like TCS and all that, so then one can understand. So I think once you understand that, once the buyback contours will get announced, which in my view will not be over 5,000 crore, then probably market will see the corrections. Otherwise, this is pure exuberance. I am not saying that the Q1 numbers were not good. Q1 numbers were good. Order inflows seem to be very good. All their verticals are doing quite well. But this buyback theme, which is pulling up the stock, in fact, we are advising our investors to use this opportunity to exit, maybe to look to buyback again at a lower level by about 50 rupees.